Will the market extend last week's rally into this week as we get ready to wrap up the month and go into the last month of the quarter? That's coming up on today's edition of 3 Minutes on Markets and Money. The markets had an outstanding rally last week with markets up nearly 10% from the lows. Now, is that just a bear market rally or is the bottom in? That's kind of the real question here. Too soon to tell. We have a lot of companies right now that are offsides in terms of market allocations, in terms of equities as well as bonds, hedge funds, pension funds, mutual funds, anybody running a 60-40 allocation. All those companies are now offsides here. They're underweight equities, they're underweight bonds after the recent sell-off this year. And as we enter into the last month of the second quarter, a lot of that rebalancing work is going to have to get done by then. The question will be, is there enough impetus there to drive markets higher? We had talked about over the last few days that volatility really has not been suggesting that the recent sell-off had legs, because despite the fact the market was selling off pretty sharply in April and May, volatility itself actually was not rising. Volatility is actually declining at that standpoint, suggesting that really there wasn't as much fear in the market as market prices may have suggested. And again, after the market's kind of based here for a few days, we finally got that rally. The question, of course, now is, does that rally have legs, and can this rally go further, or is this just a temporary, another reflexive bounce in the markets that will retest or maybe even set new lows? For that, let's go take a look at the market. We can see that this bottom that we were building here over the last couple of weeks continued to hold. Even though we'd have days where markets would break below that bottom, we continually recovered back to that level, continuing to hold that support base, which was good, and that allowed our MACD buy signal to actually trigger. And that led to this very sharp reflexive rally that we had last week. And again, markets really participated very well, fairly broad rally, lots of participation. That did bring the Williams %R overbought indicator back into very overbought territory. But that indicator can stay overbought for a bit of time as markets continue to rally. Relative strength also coming up here, not overbought just yet, but starting to head into that territory, suggesting that this market could rally a bit more here over the course of the next few days. And again, as we kind of get into the 1st of June, I wouldn't be surprised to see a little bit more rebalancing work, putting portfolios on a bit more positive stance, at least for a couple of days. However, I do want to point out that the markets are still within a very defined downtrend in the markets. We haven't done much at this point in order to break that downtrend. So that suggests that markets could rally here back to the 50-day moving average. Now, there's not a lot of room to the 50-day, but that's going to be really where the top of this downtrend really coincides. So from an investment perspective, probably a great time to start to look to reduce some equity exposure, rebalance risk in portfolios, sell those stocks that haven't been performing. And again, if we do break out of this downtrend and get back onto more bullish footing, we can always reinvest that cash. But there's a real risk here that somewhere between where we are today, and again, markets looking to open a little bit weaker this morning, not surprising after such a big rally last week. But if markets can kind of rebalance here and rebase here for a few days, the shot to the 50-day moving average is very likely. And again, that's probably going to be your best opportunity to make a bigger exit. But I would be reducing some exposure starting today. Tomorrow, if the market continues to rally, do a little bit of work each day here to get your portfolio back into a position that you want to be in. There's a very high probability that with the Fed starting to tighten their balance sheet this month, as well as continuing to hike interest rates, as well as seeing weaker economic data and weaker earnings, that we could see a retest of these recent lows. That is certainly not out of the question or out of the possibility. So use every day here to start rebalancing that risk in your portfolio to get you back in a position that you want to be in. That's 3 Minutes on Markets and Money. We'll see you tomorrow.